Good day, friends. I am Sanjana Deshpande and welcome to Market Perspective at Emkay Wealth Management. In today's episode, we have Mr. Ashish Ranawade, Head of Products at Emkay Wealth Management, for an insightful view on markets, investing, and more. Welcome, Ashish, sir.
Thank you.
Many investors struggle with market timing. In your opinion, is it more important to focus on market timing or maintaining a long-term perspective?
So in equities, if you see, every 3 to 4 years, there is a correction in the markets, right? But if you take a longer term perspective, let's say the last 25 years, equities has compounded at a rate of something like 13-14% returns, right? So the longer you stay in the market, the chances of you getting a better return are always higher. Now, many investors have this thing that, if they are able to time the market, get out before the market falls,
Yes.
and invest when the market has actually fallen, that never really happens, because you are not going to be able to pinpoint as to when the market is going to fall. And for instance, if you see the current situation that we are in, the markets are expensive on valuations front, and they were expensive even last year. But between last year and now, we have seen fantastic returns, right? So more than timing the market, I would say investors should have an asset allocation plan. And every time, let's say, one particular asset class, for instance, equities, runs up and it disturbs the ideal asset allocation, then you rebalance, then you cut out on equities and come more into fixed income. And then if the market falls and your equity allocation goes down, then you move back from fixed income into equities. I think that would be a more sensible way of managing your portfolio, rather than just waiting that equities will fall, hoping that equities will fall, getting out and then trying to get back in.
How important is diversification in a portfolio, and what are your suggestions for maintaining a balanced asset allocation?
So, diversification is always important from a wealth perspective, and that diversification also means having, let's say for instance, equities. It's not just mid caps, large caps and small caps. It also means overseas equities. Now within overseas, then it opens up a lot of options in terms of what kind of stocks, right? So you have the opportunity to have tech stocks, you have the opportunity to have China stocks, you have the opportunity to have some pharma stocks from Europe. So it's extremely important to have a very diversified portfolio within a particular asset class. Equities gives you that opportunity to have so much of diversification, because there is so much which is available. But if you look at fixed income, you largely play credit and duration, right? So there comes a time when you can play duration. So you move into long dated securities when interest rates are expected to fall, and you can move into credit when you start seeing that there is a yield curve is giving you opportunities in terms of the spreads. So that's broadly the two things which you have in fixed income. And then commodities, I don't think you really have the ability to play too many commodities, but I think gold, silver and a few other commodities you can include in your portfolio. It's important to have a diversified portfolio, because that kind of reduces your overall risk on the portfolio.
With interest rates fluctuating and global central banks adjusting policies, what is your outlook for bond markets, and how should investors approach have fixed income investments?
So as I said, right now we are in a falling interest rate environment, and typically in a falling interest rate environment, the longest duration bond performs the best. And at Emkay Wealth today, we are recommending the 2064 government securities paper for an investment, because there's a good chance that over the next 1.5 years you would get something like a double-digit return on a sovereign bond. So So that is one area where we are asking investors to add this paper to the portfolio. In addition to that, rate sensitive sectors like automobiles, real estate, and a whole lot of other names are there which can give you that ability to even commodities can give you that ability to um, get better returns in a falling interest rate environment. So we have put out a report in terms of where investors should focus on in the next one and a half years. So I would suggest our investors to get in touch with our relationship managers for a more detailed input in terms of what should be done over the next one and a half years, how you should position your portfolio over the next one and a half years.
While a global slowdown seems imminent, are there any specific sectors or regions in the US or European markets where you still feel that there is some strong value opportunity left for the investors?
So I think we are in a environment where 3.2 to 3.3% global growth looks possible over the next 2 years, and which is not too low, which is not too high.
Yeah.
But if one has to play, from a global perspective, then there are rapid advances being made in technology, and there are tech stocks where one can position the portfolio. Of course, Nvidia kind of stocks have already run up, but then the beauty of tech is that there are so many companies which are listed on the Nasdaq which are still to prove themselves. So whether it's on the tech side, whether it's in the green energy space, there's a whole lot of stuff which is happening in energy. There's a whole lot of stuff which is happening in, for instance, sustainability. So if I were to look at the overseas market, I would look at these segments. Pharma, there is a lot of innovation which is happening in pharma as well. In India specifically, manufacturing is going to be the focus of this government going forward, and I think for the next 5 years, manufacturing is what we would focus on. Also, there is a huge amount of infrastructure creation which is happening, and at some point in time, a lot of capex will start coming in. So companies which are positioned in infrastructure, in capex creation, I think these are areas where we would like to position our portfolios.
Yes. Gold has seen a consistent rally. Given its current rally, do you expect this trend to continue? And what kind of returns should investors anticipate from gold in the near future?
See, gold, the way we look at gold is a proxy for fixed income. I mean, gold will give you slightly better returns than fixed income.
Yes.
And till now, the gold bonds which the RBI used to come out with, that was a fabulous instrument. Unfortunately, that's looks to be uncertainty in terms of whether it will be launched again or not. So the only option which an investor has from a financial product perspective is an ETF. And I think the way the markets, the gold prices have run up, you've already got your average returns on gold over the last 2-3 years, right? So there's a possibility that gold may sleep for some time now. It may consolidate, the gold prices may consolidate. But if they do rise even further from here, then you have a chance of a correction in gold prices coming in maybe a year down the line. So it's kind of a tricky situation as far as gold is concerned at this point in time, but we would always say that a 10% allocation to gold is prudent from an asset allocation perspective.
As bond yields rise, do you see attractive opportunities in certain segments of the fixed income market, such as government bonds, corporate bonds, or high yield debt?
So as I said, in a falling interest rate environment, it's the duration which will be at play. And the best way to position your portfolio is to buy the longest dated paper. And we have in India the longest dated paper, which is the 2064 government security, which has been issued by the government of India, and it carries a coupon of something like 7.37% paid biannually, and the long-term capital gains on this instrument is also, if you hold it for more than a year, it's 12.5%. So we feel that a double-digit kind of a return should be possible for investors, and I think given the way the equity markets are positioned today in terms of valuations, I think that this particular paper gives you a good option to kind of balance your overall portfolio.
Okay. Within India's diverse landscape, which sectors or industries you believe are poised for growth, and where should investors be looking for opportunities?
So without doubt, manufacturing,
Yes.
as I said already, manufacturing has the impetus and the policy support which has been provided by the current government. In addition to that, in manufacturing, the beauty of manufacturing is as you build scale, economies of scale will help you,
Yes.
right? So that's is something which we feel will happen over the next 3 to 4 to 5 years. And India, from a cost competitive point of view, I think is very favorably disposed as compared to some of the other manufacturing economies which have seen the cost of manufacturing go up significantly. I mean, clearly there were times when the governments there used to subsidize, and of late it's going to be very difficult now for many of the governments to subsidize manufacturing. So I think from that perspective, I think India's time has come, and manufacturing is one segment where we will focus on. The second one would be in infrastructure creation, companies which are focused on that particular segment. And as I said earlier also, private capex will start, and companies which are engaged in helping creation of private capex and exports, because clearly Europe and US are not the best regions to manufacture a whole lot of goods. So wherever India has the competitiveness, I think the policies of both of these economies to sway away from China, I think that will benefit India, and it's already being seen. So we'll continue with that.
Okay. This next is a rapid fire round, one word for each. So, equity,
For the long term,
mutual funds,
diversification.
bonds,
The best play is the longest duration bond.
global markets,
Diversification,
gold,
10% of the allocation.
crude.
Will be range bound, so not much is going to happen there.
Okay. Thank you so much, sir, for your insightful views
Welcome.
on the investing segments and market. Thank you for watching, everyone. Please do like, share, and subscribe. And for more enlightening videos on markets and perspective of the markets, please do join us at Emkay Wealth Management.